want to thank everyone for joining us today on the TradeXchange week ahead webinar. We'll be going back to our normal schedule on Sunday mornings starting next week. Just a quick update for all our members. As always, we'll be posting this video on our social medias and sending out via our daily analytics. Want to thank everyone for joining us. And a quick look at last week. The markets ended another lackluster week higher following the CPI and PPI report, which showed a continued cooling in the inflation markets. Even with economic headlines showing a slowdown in the economy, traders pushed that to the side and focused on inflation reports. One thing to keep in mind on those reports, one of the key headlines on that weakness were the showings on the energy markets, which do not calculate the recent run we have seen in the oil and the gas markets, members. Keep that in mind going forward with the next inflation report that is on tap. We saw strength in the materials, energy, financials, and industrial sectors, weakness in real estate, tech, and utilities. One thing we also noticed in recent weeks has the abnormal amount of continued weakness in volume. We haven't seen a large volume day in weeks, which could correlate to the fact that we have not really seen a big market move. We'll see if that continues this upcoming week. And earnings started off with the financials this week, past week on Friday. JP Morgan, JPM, Wells Fargo, WFC, NC, Citigroup kicked off the earnings season with all three topping consensus estimates. One thing we did notice on those beats was the impact the quote-unquote mini financial crisis had that benefited the large cap banks. We await to see the impact on earnings on the regionals this week, but we do have a few more big banks coming up this week. We have Bank of America, Goldman Sachs, and Morgan Stanley. One of the key ones earning-wise that will be focused on a lot is Schwab, SCHW, following its recent connection in regards to the regional weakness. So we'll see the impact on all those names this week. On the earnings front, analysts are forecasting earnings to fall for the S&P 500 companies by an average of 6.5% overall. On the Fed speak side, the Fed continues to be on the hawkish side, as many Fed speakers continue to state that there is still more work to do to calm inflation fears. Markets, though, either do not believe what is being mentioned by the Fed, or they simply do not care for now as markets continue their bullish run this year. As always, in this market, you don't care unless you are forced to care. So we'll see what the impact will be in the next few weeks going into the summer months. The VIX index hit a new year low, and by a multi-year low, as investors believe the market volatility has eased, as we can see in the past few weeks. Will that last? We are right by a level that has seen a robust jump the past year. You'll notice what we're talking about when we look at that VIX chart later on in the presentation. We are watching this very closely going into the summer months. As we have always known, the summer months tend to be a lot less volatile going into the end of the year. Coming up this week, we continue to await some top earnings. We have AA, Alcoa, AXP, American Express, BAC, Bank of America, GS, Goldman Sachs, IBM, J&J, Johnson & Johnson, MS, Morgan Stanley, NFLX, Netflix, PG, Procter, SCHW, Schwab, AT&T, and Tesla, TSLA, and many more on tap. We also have some key economic events with housing starts and permits on Tuesday, Beige Book on Wednesday, jobless claims, and existing home sales on Thursday. You'll see in our economic calendar a flood of Fed speakers on tap to speak for the week. 10 that are scheduled alone not counting any in regards to media interviews or any conferences. We expect a volatile week and a week where we hope to get some volatility back in these markets. Now, a quick look at the week ahead on the starting up with the upcoming US and world events. As we mentioned, earnings season has started. We have some of your top earnings right here on the list. On Monday, we do have Fed speak Barkin, ECB's Lagarde speaking, and some China headlines we're going to be watching in regards to GDP, retail sales, and industrial production. On Tuesday, members, it is tax day. Hopefully everyone gets those in by the 18th of April. We also have Fed speak Bowman and the U.S. housing starts and permits. Wednesday, Fed speak Williams and Goolsbee, the U.S. Beige Book, and on the European side on the UK, CPI and PPI. Thursday, a very busy day. Fed speakers Waller, Bowman, Harker, Mester, Bostic, and Logan. U.S. jobless claims and existing home sales. And on the international, on the Euro side, the ECB minutes and consumer confidence. Friday, we have Fed speak Cook and double widget options. As always, members, the company events for the week. In regards to these, you can always reach out to the news desk via Ask the Desk or email for any updates on this, as well as your conferences for the week. Your calendar, as we mentioned, a flood of red, members. Look at this for Fed speak. There was so much on Thursday, we had to add it to the previous day, which is stated here below Fed speak for Thursday. A large amount of Fed speakers on tap, a pretty busy economic week, and earnings. So it's a very busy week coming this week. International economic calendar for the week as well looks pretty busy. We have our Fed schedule breakdown, a breakdown of the Fed speakers and where they're speaking and the topic of their conversation. A little week ahead commentary by the TradeX. Members, earnings for the week. We're going to start seeing this build up more and more. But as always, we bold out some of the big names coming up. On Monday, we have Schwab, SCHW, pre-market. And on Tuesday, we do have the big banks as well, Bank of America and Goldman Sachs. So a pretty busy week coming up on the earnings front. Fear and greed index, members, the greed is taking over. Every week for the past few weeks, we've been seeing this jump from the extreme fear a month ago right here to fear, to the neutral, to greed, and now more entrenched on the greed side. We've been mentioning for weeks on weeks on weeks that the bullish momentum is here for now. Headlines in regards to inflation, Fed speak, even the banking crisis really has not affected this market. The greed is here, the strength is here, but it always comes down to for how long. One thing that we want to notate, we're going to go scroll back up. We noted here an old school adage that we do follow at times is traders believe the last to move in a rally are the small cap names on insane value with insane moves for no reason whatsoever. What did we see the past week? Every day, if you're in the news desk, nonstop volume moves on low flow, small cap names on no specific headlines. So are we there? Who knows? Is it going to be a sell in May and go away? Who knows? We're coming up to that point. And as always, stay on top of the news desk to get a better idea in regards to commentary, technicals, and trader views. Weekly sector performance. We saw strength in energy, financials, industrials, materials, weakness in utilities, tech, and real estate. Your industry comparison year to date continued. All indices members are green for the year. The S&P, the Nikkei, the Nasdaq, the Sydney, the industrial, the Europe stocks market, all green on the year. Strength continuing. Your CPI 12-month data chart seeing a strong downtick back to 5. Even if you look at it, like every chart we look at it as a technical chart. This could be some support here, members, at your level around 5%. We'll watch it very closely, see if it is a technical chart as well, and we'll follow up in the next few reports. Your target probabilities for the May meeting. Currently, traders are expecting a quarter basis point hike at 78%. Last week, members, this was 50-50. So we are seeing a 25 basis point look right now going into the May report. Year-to-date percent returns. Coffee continues its strength, up 16%. NASDAQ, small uptick. Gasoline, a small bump. Lumber saw a 10% move the past week. Gold, not much of a move. Copper saw a jump around 3%. S&P, small move. Silver as well, a jump of a 1.5%. Crude oil up about 2.75%, and the Dow up around 1% for the week. The weakness, members, continue to be that nat gas down over 50%, heating oil down over 21%, and then VIX continues to show weakness, down over 21% year to date. Your AAII Investor Sentiment Survey, as you can see on the bearish side, not much of a move, but we did see a small uptick on the neutral mentality, small downtick on the bullish mindset. We'll see if that correlates with all the recent headlines in regards to the earnings season coming, and if traders are slowly going on a more neutral look going into these reports. Sector Outlook Weekly, as we mentioned, the top three, communication services, information tech, and consumer discretionary, continue to stay at the top, and financials, utilities, real estate, we are seeing those weaknesses continue. The FDA calendar will be updated throughout the week. Members, keep in mind, with the AACR meetings this week, expect a lot of headlines coming from the biotech sector. So as always, check the news desk for those headlines and reports. Your IPO lockup expirations, as well as your expected IPOs. Now, a quick look at charts, and then we'll round up the day and go over a few questions we always have throughout the emails. Gold, no changes to the chart, members. With that break last week above 2,000, we saw another high hit of 2063. One thing to watch is the bearish reversal we saw on Friday, all the way back to around support levels. 2,000, downside watch, upside watch on volume could continue to the 2,100 level. That's on gold. SPY daily. We created an uptrend from March, similar to what happened previously at the end of December into the January. So we're watching this, as well as members, from October to November. So we're watching this very closely. Last week, we mentioned a quick upside move above 410. We broke that level, hit a high of 412.81, and ended right by resistance levels. Watching these levels on the upside to the downside, and watching this uptrend very closely on the SPYs. NASDAQ. Same thing with the NASDAQ. Very similar action going on here, members. So we added this uptrend on the NASDAQ. We've been going over these levels for the past few weeks, and that 12,250 level continues to be a key level resistance point. We're watching to see if we have the same situation that happened over here in end of January, February, where we tested that 12,250 and sold off. Watching it very closely, as it is building a very interesting range right here. So we're watching for any upside move above 12,250 or a downside break on this trend line. SPY daily, very, very similar patterns showing in the SPYs. Triple Qs, same thing. Pop top here, top here. We're seeing something very similar here and here. Watching it very closely. IWMs on a moving average and trend look, as well as your 10-year yield. 10-year yield daily. No changes to the chart. We mentioned last week that we are trending by support levels and to watch 3.2% to the downside, but a break above 3.4%, we could see a test of resistance, and that is what we got. We broke 3.4%, ended right below resistance levels at 3.522%. Watching this level in the next directional move for your 10-year yield. Diamonds on a daily, as you can see, very interesting patterns are being built here, similar to ones in the previous that we're watching very closely. We would love to see, for the bulls, a break above this level, but the bears are still watching this level of resistance as a key indication of a pop and drop. IWM daily, No changes to the chart. Range being built in this range of 175s to 180. Watching both sides for a directional move. Volume is needed though. A break of 175 could test the 170 support. An upside break, you can see that gap fill right here. If we break this upside 180s, we can see that gap fill very quickly, which is around the 180.50 to 181.50. Watching IWMs for both those levels. HYG daily on the moving average and trend look. S&P 500. We added that uptrend from March lows, a low volume week, which was surprising since we did have that CPI and PPI report. Not much action. Still looking though on a bullish level as we're watching closely this 4,100 support level. 4,100s to the downside, 4,200s is very key for a continued upside move. VIX, as we mentioned before, numerous tests at this level. Test, 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 test. This is where it gets interesting. Are we going to have a test and a pop, test, pop, test, pop? Or are we going to break down to this very, very key level support around the 16 to 18s level, which is very key on the VIX as that support level. Oil, no changes to the chart. We mentioned last week to watch the 80s level resistance for an upside move, and that is what we got. We hit 83.53 and closed the week above $80 at 82.68. We're continuing to watch that $80 since we do have that very large gap right here to the downside. But if that level continues to break and build a base at this level, we could retest the 85s. And at that point, 90 is right around the corner. Watching oil closely on that 80 level. If we do break this support here, we could easily retest that gap fill. US dollar daily. No changes to the chart. US dollar continues to trade right along this downtrend that has been in place for the past few weeks. Watching this downtrend as a key level break on the upside for any bullish trades. One indication that we saw last week was the weakness, but a large bullish reversal to end the day right by the bottom end support levels of 101.58. Watching the US dollar closely, watching this downtrend, very similar to this time last time when we broke above and saw a very strong move on the US dollar. Bitcoin, we added the 32K level resistance. We mentioned that 30,000 level is key, and if broken, could see an upside move. We broke 30,000, hit a high of 31,200s. 32,000 is next key level resistance on watch. We are in a bullish range for now, unless we see a break back below 30,000. 30,000 to 28,000, we could see a bearish change. SMH daily on a moving average and trend look, and your euro. No changes to the chart. We mentioned a key watch of 110 as a quick upside move, and we broke 110, hit a high of 1.10752. We ended the week, though, with a bearish reversal right back to support levels at 110. So watching the correlation between the euro and the US dollar. We're right at very important parts of the chart. Downside support on the euro. We have that downtrend that we've been following very closely on the US dollar for any upside move. Watching both very closely as we do have a downtrend, an uptrend as well on the euro. So members, that's your week ahead report. As always, we want to thank everyone for joining us this week. As we mentioned before, we'll go back to our Sunday schedule starting next week. And just a quick update in regards to a few of the emails. As always, our thoughts, members, this week. It's a very busy week. You know, we have a lot of Fed speak on the agenda. We have 10 right here, not counting any possible interviews or other conferences that are not scheduled. We have very busy economic week, a very busy housing economic week. Housing market index on Monday, housing starts and permits on Tuesday. You have your MBA mortgage applications as always on Wednesday, existing home sales on Thursday. So it's a busy week across the board. And on top of all that, we have earnings. Some of the rest of the big large cap banks, as well as some key tech names on watch. So it's a pretty busy week. Thought process, as always, it's difficult. We had the employment report, the CPI and PPI, and we got nothing. The market seems to be tired. It seems to want the next direction. We had a large pop off of weakness in the past few weeks. This year, strength-wise across the board. The question comes down to what is next. We're at some very key levels and resistance levels that you've seen in the charts. We need the volume to come back into this market to add conviction to those upside moves. And on top of that, we had this insane market and small cap names the past week where you sit down and you just don't understand what is really going on. So we watch this level. We're watching the action on small cap names, seeing if reality comes back into play, and seeing what the market does with all of the Fed speak, economic data, and earnings on tap for the week. We are going into the summer months. Summer months are usually very slow volume on the market action as well as news flow. We'll see if that changes this time around. But the past few weeks is signaling something where we are in that mindset of slowing volatility. We'll see what happens with the VIX, see what happens with the markets. Stay tuned. It's a busy week coming. As always, check the news desk every morning to get yourself ready for the open. Check the news desk every weekend to get yourself ready for Monday. And remember, it's good luck. Any questions, as always, shoot us an email. Reach out to us at Ask the Desk. We're always here to answer your questions in regards to technicals, news flow, or even if you just want to say hello. To everyone, thank you. Enjoy the rest of the weekend. And we'll see you all first thing Monday morning. Thank you again. TradeXchange out.